You want to do a quick
man.
sound check just to make sure?
I'm seeing no sound on mute. I'm not seeing any visual on your end either, Gary, if you want to try to repush.
Okay, so is there no visual?
I don't see anything that you're pushing.
We're not going live?
The channel hasn't turned live yet, no, on my end. I can try to refresh it, but I see a lot of comments like no sound, everybody has a mute, so let's double check.
Let's go ahead and take a look right here, and I'm going to double check here. I'm just going to go to the actual channel itself. Why are we not pushing live? Let's see here.
Okay, no, I can hear myself.
Oh, so you can hear?
Yeah.
Okay, so let's do a quick sound check quickly. Everyone can hear sound? Go ahead and type in the chat again.
Yeah, everyone says good now. Yeah, we're good.
Oh, okay.
Yep.
Must have been a little glitch. Okay, so this is the deal. Okay, so we just started off. Let me go ahead and get back to the broadcast right here. So traders, welcome to the session. For those that had sound issues, looks like everything is sorted right now. We want to go ahead and welcome everyone here to the AAA session. Welcome to the session. Once again, we want to go ahead and make sure that everyone subscribe to the channel if you have not done that already. Also, very important, smash the like button. Smash the like button because we want to make sure that this video gets out to everyone. The only way to do that is beat the Google algorithm. Smash the like button. We'd love to get you guys to do that. And then secondly, we're going to go into a live trade right now. Live trade right now. If you notice how the dollar moved last week, specifically on Friday, we had a big rally in the dollar on Friday, but it came all the way back to where it started the day. We had this long wick to the upside. There was great opportunity. Sunday opened up and markets just fell. Let's go take a trade right now for a 20 pip grab. And I'm going to explain to you why we've done this. So I'm going to go into the chart right now. I'm going to place the trade right now as we take a look at the details. Here it is right here, US dollar CAD. Big wick to the downside. It's a daily time frame. But all I want to do right now at 26.58, I want to go ahead and place a trade. Now I'm going to place a trade right here. You're going to notice what I'm going to do. I'm actually going to do this right here. I'm going to use the matrix tool. And I'm going to add a trade here. I'm going to go with 5 entry points. I'm going to put in about 0.01. I'm going to go in with 25 distance spaces. I'm going to put my stop losses below. Yes, I'm buying the market off the support right here. And if it goes a little bit lower, that's fine. We'll get in with some more entries because we're placing multiple entries. I'm looking for only 20 pips net. I'm going to place a trade right here, exactly here. I'm expecting to bounce back up to the upside. We'll go ahead and track that and see how that plays. Just a quick little rally, a quick little correction. That's all I'm looking for right now. Now, that's the trade of the day so far from me. Let's get into the details of the session today. And I've got Chris and Tyson, as usual, every week. And we're going to be talking about stocks, cryptos, and Forex in today's session. So, guys, get a pen and paper, get ready, because we're going to rock and roll right now. And let's start off with Chris. We spoke about the SPY. What is happening with the stock market right now?
Yeah, what I thought was interesting, Gary, is if everyone takes a look at the SPY chart, the SPY, that's the ETF that follows the S&P 500, what you'll notice is you can go back to pretty much March of this year. Yeah, let's go March this year. March, April, May, June, July. You have 5 months in a row that we've seen about these halfway points of every single month. We've seen a dip. And last week was that same situation. We saw the market sell off about 2 to 3%. And this week, they're violently starting to buy again. We had a nice kind of buying spree to wrap the week up, even though the markets finished negative last week. Literally, all 3 indices, the Dow Jones, the SPY, and the NASDAQ, were all in red last week. But they sold off aggressively early on, and they fought back. They just barely finished the week red. But now that we have crossed that halfway mark, here we are towards the end of the month. The SPY is pushing up to new highs. I had chart alarms go off today. The SPY is at new highs. The Qs are at new highs. Tyson, what are your thoughts? I mean, we have, again, path of least resistance remains intact, drifting up, melting up. I'm still looking for a technical correction, but the market is adamant about closing higher for probably this month and probably pushing strong this week to wrap it up.
Yeah, it's actually really interesting. I was just having a conversation yesterday. Gary mentioned that it was hot in Florida. I love being in the hot weather. It's awesome. We went to the beach yesterday and we were talking about how some of my positions, and we've been talking about, in equities on demand, it's a tale of two markets. You've got the haves and the have-nots, and I think eventually we're going to see that come home. I call it coming home when we get big divergences happening, where we get, for example, you see a divergence happening right now in comparison to like the SPY and the Russell, or stocks like let's take Microsoft and a Beachbody, right? Beachbody's nothing like Microsoft. Don't get me wrong. That's kind of maybe the most preposterous statement ever. But in the scenario of, it's Beachbody's a quality stock, generates $1 billion in revenue. It's not going to go out of business. Is it worth a $7 stock, or should it be $10, $11, $15? I think it should be higher than $7, and I don't think it should be a $25 stock yet. At the same time, I think Microsoft is probably worth what it is, but I think it's gotten a little overdone. So what I'm saying is we're going to have this kind of come home trade where kind of maybe some value starts to pair off, some growth kind of comes in, and we kind of see kind of a convergence happening. But anybody who's trying to sell the market right now is just getting absolutely crushed, man. You cannot fight this market. And the reason why, this is the same story that we've had for 10 years, 11 years, 12 years, is where else are you going to put money? Where do you put money? I mean, so anybody who's like, oh man, it's got to fall apart. It's got to fall apart. It's got to fall apart when there's an alternative. But there is, from my perspective, there is no alternative, and so therefore, until there's an alternative, there is no other place to put money. And is Bitcoin or is cryptocurrencies the alternative? Potentially. And I think long term they are an alternative. They are a phenomenal alternative. But we have people that hold trillions and trillions of dollars worth of assets that don't necessarily believe in them yet. The new cohort of investors actually do believe in cryptos. But anyway, you can't sell this market. You got to look for high quality stocks. You got to have conviction in what you own. And even if I go back to the Microsoft example, Microsoft's a phenomenal company. I like it. I wouldn't mind owning it, but I'll tell you, at these levels, Chris, on a lot of those high flying stocks, I'd be selling calls. I'd be willing to get called away to buy back at lower prices.
I agree. And just on that note, Tyson, Microsoft is 357 bars away from like a balanced trend on the daily chart, which is a ton, because usually my average on that is like 200. Like 200 to 250, I'm looking for tops to form, sideways movements, things to kind of find some type of equilibrium. And Microsoft has just blown it all away since the COVID low of March 2020. So I go back to the SPY. I said this last week in a lot of my YouTube sessions, anywhere between like 7 to 12%. And again, I'm not bearish. Okay, I'm not bearish on the markets. But a correction needs to happen, period. Just from technicals. You can put all the fundamental crap you want to and throw it in there and say something's going to stick. Maybe it's Afghanistan. Maybe it's U.S. pulling out of Afghanistan. Now we have a humanitarian crisis on our hands. Maybe it's COVID. Maybe it's Delta variant. I don't know. I don't care. Something technically is lining up. These are the clues that we're playing. And then the fundamentals will line up and give you the excuse and the catalyst and whatever. But a technical correction is needed. It's a correction. I'm not bearish. But like Tyson, Microsoft, it's at 304. I mean, I have been adding to Microsoft for years, and we sat dormant for like 8 years, and all of a sudden it went just exponential growth. So I was adding and adding and adding just little bits at a time every single month, dollar cost averaging, as this is a stock I love and I want to own. But as we broke above 250 and stretched up to 300, I still have some Microsoft that I'm in, but I'm not adding anymore. I'm to the point now where it's like I'm not going to keep adding at historical highs. So I'm happy with the position I have. I want to buy it on sale. I want to buy Facebook on sale. I want to buy Disney on sale. I want to buy Amazon on sale. I want to buy all these amazing stocks that have been kind of carrying the markets for the last year. I want to buy them on sale. And I think a correction needs to happen to get them on sale, number one. But just traders, you need to be ready. And I think once we come out of August, one thing, as we get closer, look, fellas, this is the last, we have one more day, August 30th, next Monday. So we'll do a AAA session next week to officially wrap up the month of August. But as we kick off in September, going through Labor Day weekend, I have a feeling after Labor Day, I think things get a little bit dicier in the stock market. I think volatility creeps in. I think September might have the old September effect. And we see this kind of, much needed correction just kind of plays out. Maybe it's fast and furious. Maybe it's a cleansing. But that's at least what I'm mentally prepared for. So traders need to be ready to hopefully buy things on sale and just set chart alarms and get ready to take action.
I will say this, though, Chris, just real quick, to wrap this stock portion up.
Yeah. Yep.
don't try to short the market.
Right.
And the reason why I don't is that I've lost a small fortune trying to short the market, first of all. So take it from me. So don't try to do that.
Yep.
But also, we have we have trillions of dollars of natural buyers coming in the market every single year,
Yep.
in the form of forced kind of retirement, not forced, but you got 401ks and pension plans. You've got a young cohort of workers now taking over from baby boomers and stuff like that are getting paid decent amount of money, that have 30, 40-year investing horizons. So they're not going to be selling their stocks for a long time, and they're investing every 2 weeks with their paychecks. Also, you have corporate buybacks coming. You have huge corporations with massive cash positions right now. And some of these people are running it. So right now they're doing a lot of mergers and acquisitions and stuff like that, but they're going to eventually run out of places to place that cash. And the place that they're going to place the cash at is in the form of dividends or buybacks. That's what's going to come next. And so that's going to be a natural buyer under the stock market. So it's hard to sell. However, if you're worried about where we're at, raise cash, find stocks you like long term, and look to buy them on pullbacks. Disney pulls back $150, Chris, man, that's a phenomenal level. 140 even better. Find those. Nike pull back to certain levels. I want to start to buy 3M. Companies like that, and then take some shots on some speculation. A Rival, a Palantir, Beachbody, different things like that. SoFi, those are actually at levels right now that I would actually start buying in smaller portions of your portfolio. But there's some good opportunities out there. Raise some cash, look to find high quality, find stories you believe in long term. So, for example, SoFi. Do you believe this whole digital financial transformation is real? Do you believe that the baby boom or the millennials, the Gen Zs, the Gen Xs, Gen Ys, are they going to start making more online? I think so. So I think a company like SoFi is going to be a household name someday, or potential takeover. And I think buying it at $14, $15 a share, you fast forward 5 years from now, you're going to look back and say, man, I wish I would have bought it for $14 a share.
Yep.
There's good opportunities out there, but you got to pick your spots. Or if you want to stick in the bellwether stocks, you got to raise cash and buy them cheaper, but do not short the market.
I agree.
Okay. Well, Tyson, you did ask where could we put our money, and I said Dogecoin. So
everything but Doge. No, I'm joking.
All right. So we're going to talk about cryptos. We're going to talk about currencies right now. We're going to shift over right now from stocks to cryptos and currencies. Let's go to currencies first before we go to cryptos, because I absolutely got something to talk about on cryptos that I think is going to open up everyone's eyes as to what we're anticipating based on the altcoins. We've had some movements in the altcoins, but we're going to talk about that in a moment. Before I'm going to get myself ahead of the game here. So let's talk about currencies right now. Currencies, if you take a look at the chart right here, I've got a dollar index chart up here. Market rallied up. We had indecision on Friday. You don't actually see how the dollar really affected the other currencies, specifically the US dollar CAD, when you look at the dollar index, because you look at this little wick on the top here, you go, oh, little baby wick, nice. It's like the mini me, right? The mini me of Forex. So it's got a small little move right here. But if you go to a US dollar CAD chart right here, what? I mean, look at that. That's like huge right there. And the best thing of this whole process right here is we're anticipated that very early. Look at the swings that we placed over here. And we had the wave 1, wave 2, wave 3, wave 4, wave 5, right here at the 127, and price turned around. Price turned around exactly there. Now, I sold a whole bunch of US dollar CAD. I've even, in my videos, my YouTube channel and all that other good stuff, my trading room, we spoke about it. I even showed my positions, and I sold a bunch of US dollar CAD positions, and I was selling. I actually, just on my phone right now, we're closing out the last few shorts that I had on the US dollar CAD, and that's why in the beginning of the session, I said, let's buy for 20 pip grab on the US dollar CAD because of this reason. Let's go back to the chart right here and take a look. So if we go to the chart right here, we're looking at a previous 1.618. Check this out. See this 1.618 right here? Let me go ahead and put a little pencil right here. It's a swing 1.618 right here. And it's right where price is at the moment right now. So I'm expecting at least a bounce. 20 pips. Maybe it goes 40 pips up. But 20 pips at least we'll be able to grab from this. Now, if it does go below this and we close out below there, guess what? We're still going to have the opportunity for a 20-pip grab, because what we're going to do is we're going to be leveling in on this position, right? And so we're using support and resistance as a place to start buying or selling. But then what we're also doing over here is we're using a cost averaging approach, obviously built into your equity management of how you can go ahead and cost average. But we're going to use a cost averaging, and we're just going to chase for 20 pips. Why only 20 pips? Well, the market's in a corrective move based on a U-turn, and all we want to grab is 20 pips and get the heck out of Dodge. That's all we're going to do that. And we're still in that trade right now. We got in at 26.59 or so. We'll see if we can grab our 20 pips before the end of today. Because once the market closes out, then we are going to then look for a correction move based on this U-turn. It's going to be huge. So I love the way the Chris and Titan, I love the way the dollar's given so many opportunity this week. So many opportunity this week. And if you go back to the dollar index, this is not just for the dollar index trade setup right here, right? Meaning like US dollar CAD. This is setting up New Zealand US dollar, Aussie US dollar, Swiss. It's setting up, and Chris, I know you spoke about a Swiss trade a couple of weeks ago. We're going to take a look at that trade as well. And then we're looking at US dollar CAD, absolutely a huge opportunity there. Even though I may go for a quick 20 pips to the upside, I'm going to be selling US dollar CAD all day long when we have that retracement. So we definitely look for a retracement move on that. But if we go to, let's go to Chris's trade that Chris spoke about a couple of weeks ago. Chris, what was your approach on this a couple of weeks ago?
Dollar Swiss, right?
Yeah, dollar Swiss.
Yeah, dollar Swiss. So basically, the play was this: I was long euro dollar and I was long dollar Swiss because I wasn't 100% sure which way the dollar index was going to take us. So what was interesting is last week, dollar was strong, Swiss was strong, yen was strong, euro was not so strong. And so the euro dollar dropped off a little bit for me. Dollar Swiss didn't really do anything for me. And I'm still kind of sitting in the same position. But my plan is I'm going to remain long on euro dollar, which right now is actually looking better to the upside. And I'm going to remain long on dollar Swiss because longer term, that's in like a multi-year range with major support around 8,700. So I'm just going to level myself in on dollar Swiss. My target, if anyone's interested, the target that I'm after. So right now, the reason I'm kind of aggressively long in the dollar Swiss is I'm trying to take it back to a pocket, which is around 9,300. There's a pocket around 93 to 93.50. And it's from something back in April of this year. So I am looking to kind of buy equal lows. If the dollar Swiss comes down to 90.30, I'm going to buy some there. If it comes down to 89.50, I'm going to buy some there. If it comes all the way back down to the January 2021 lows at 88, I'm going to buy some there. And even if this goes sideways, I'm just going to accumulate some low positions on dollar Swiss. But I am not taking profit on dollar Swiss until we at least get to 9,300 or higher. I know, Tyson, you've had a big prediction on the dollar Swiss for the beginning of this year, going back to like 99 or 1.00. And Gary, I know that you've also talked about this one on a multi-year scale, looking at dollar Swiss at major support and trying to make its way back up to major resistance, which is around 102, 103. So long term, it's just, I'm going to stick to buying dollar Swiss, hold it. And, my near-term profit, which hopefully is hit sooner than later, is 93 to 93.50. But if I can hold it longer, I would love to see this dollar Swiss make another run towards 95 or 96, have another pullback opportunity, make another push up towards parity at 1.00. So all that plays out with the trade was a couple weeks ago. I talked about it at AAA. I was euro dollar long, which I actually like that position quite a bit. It's kind of returning to the upside now. And hopefully we start taking out recent highs. But dollar Swiss, I'm going to hold long because I think, medium term, Swiss looks great for some weakness. Euro Swiss looks good to me to go long. Swiss yen looks great for me to go short. Pound Swiss looks great for me to go long as well. CAD Swiss, I'm long. Aussie Swiss, New Zealand Swiss, I'm long. So I'm playing against the Swiss basket right now in the bigger technicals, and dollar Swiss happens to be one of them.
Yeah, I like that. I like both of your guys' trades. Yeah, and dollar Swiss has been rolling into the year. Dollar Swiss was my top trade, my top pair. Looking at it kind of to go back up to the 2020 highs, which were right around that one level. And Gary, I I love your dollar CAD call right now. The other reason why I love it is, technically speaking, it looks really, really nice. I think even for more than 20 pips, it's sitting at a really nice demand level, as you said, an area that could become support. But then another reason to really like it is we're talking about a day and a half, a little less than a day and a half worth of total trading since Friday midday to now. A 2.5% sell-off, almost a straight line 2.5% move down.
Yep.
And we're not talking about small currencies. We're talking about two of the largest currencies in the entire world, the largest versus one of the major baskets, and one of the major currencies also, big exporter of oil and all that. So I think 2.5%. Could we fall further? Yeah, but do I think 2.5% in a day and a half is a little too far, a little too fast? I do, and I think this is a really nice shot, nice area to take a shot on the long side. I think 20 pips is easy. Honestly, I think we could actually probably see a bounce back up to towards 27.20. So I think this could be good for 70 pips, Gary. But I think the 20 pips is almost there is no guarantee, but it's a really nice shot to take. I like it.
Yeah, the most important thing I think about trading these type of things is that we've got such big bearish, specifically US dollar CAD, such a big bearish setup that we don't want to be caught up on the wrong side. I'd rather start loading up a lot more position, just like I did on the Thursday and Friday when I had all these sell shorts on the US dollar CAD and prices going up. I mean, if it wasn't for the fact that I knew that we had a 1.27 coming up that was going to complete the fifth wave, I would have got extremely concerned. Now, I'm going to be honest a little bit. I got a little over-leveraged on that because I got too excited. I definitely got my emotions taking over my decision. But I got in and I started loading this bus to a point where I'm like, man, I'm going to have to put more money in this account because I was so loaded up. But the thing is this, it actually did a great job turning and heading back down south with that Friday move. And that Friday move was just like, oh man, I can sleep this weekend, wake up on Sunday and know that I'm going to be in the money, or at least in the right direction as we're heading into Sunday, Monday move. But you know what's really exciting about not just the currencies that we just spoke about here, there's a lot of opportunity, especially dollar index. We know that oil started to rally back up again. So there's going to be dips and then rallies again on US oil. And when we looked at the charts last week, Chris and Tyson, we spoke about US oil, and we went to the daily time frame, and this was another confirmation that we got based on technicals. Look at this right here. Look at the chart right here. Yeah, we had a wave 1, wave 2 pull back up right here. After the wave 2, we had a wave 3. Then we had a fourth wave pullback, and then we had a wave 5, and we went in and said at the 127, right there at $62 a barrel. I don't know if you guys remember. We said $62 a barrel was going to be a support level, fifth wave completion, and boom, what happened? Price broke up and we went back up again. So we're going back up to around about $70 a barrel on US oil, which means if you're looking at any Canadian cross, then you can possibly start thinking about buying Canadian against any of the other crosses majors that is traded against. So that's giving us a good opportunity on dollar index. A lot of currencies to go ahead and review.
Real fast, that might be one of the big reasons why the way you're trading the dollar CAD makes a lot of sense. It's like, hey, I see a 70, 100 pip run to the upside in the dollar CAD. However, what you just said about oil bouncing up potentially to 70 kind of makes me a little cautious on that move. So maybe only looking for that 20, 30, 40 pip move higher might be the way to go. Because again, the bounce is likely to happen because we've got an aggressive move down to a level of demand, to a level of support. So there's likely going to be a bounce. What you don't want to do is you don't want to turn a trade that gives you a good bounce into a loser. So let's just take what we can get. So I think 20, 30, 40 pips is very realistic, doable. I think we can get higher, but I think what you pulled up on the oil chart right there tells me maybe be conservative on this and trade it like Gary's trade.
Yeah, and also this is a play right into commodities. I mean, one thing that we've been noticing is look at the flash crash we had a couple weeks ago on gold, and we're right back. We filled that pocket. Gold is challenging that 1800 to 1840 level. If we're seeing the top in oil, now we just recently bottomed in oil from last week's U-turn. I mean, to me, if oil crosses and closes above $66 again, then I think we're heading back to 70, 73, 74, 75. I mean, it's almost like the commodity recovery is going to be a play against the dollar. And so Aussie dollar will probably bounce really hard like it's showing today. New Zealand dollar bounced really hard. Dollar CAD continuing like we did last week. And what's interesting, Tyson, is I have several stock plays, as you know, from Equities on Demand that are, kind of commodity based, infrastructure based, but like, Alcoa and CLF and X, like steel based and commodity based. And we're also in SLV, but those have responded really nicely to some bullishness, and those are all running really, really well for profits.
Yeah. By the way, just real fast, those are really great secular plays of infrastructure, inflation. I think they're just set up really, really nice, Chris. So like you said, Alcoa, Steel X is the ticker symbol.
Yep.
There's some really nice plays out there of stocks that 10 years ago were, 3, 4, 5 times higher than they are today. That I don't know if they're going to get back up to their all-time highs, but they absolutely have, another 10, 20, 30, 50, 100% returns in them, I think, over the next few years.
I think so too.
Yep.
Let's talk about cryptos, because what we teach here at Market Traders is we teach technical analysis, because that's your foundation, right, Chris and Tyson? I mean, we have to understand technical analysis, but we can use all these other tools like indicators, systems, and all that stuff that we use to be able to implement trades. But technical analysis, if you've got technical analysis behind you and you understand it and you learn how to be able to read the charts with technical analysis, it really helps you to be able to trade any chart. Whether it's crypto, stocks, currencies, it doesn't really matter. You can trade still the charts. Now, I know that cryptos hasn't given us enough data to have really good long-term setups and to be able to technically draw up sort of an analysis on the chart to define what it's going to do long-term. But when you go to the short-term, we have enough data on the short-term to actually use technical analysis to be able to read the charts. And so what I'm going to say, Tyson, to you, because I know you're the crypto man here, is that I believe that cryptos, especially the altcoins, have not had its final rally. I believe we're in the final rally on altcoins. And why am I saying that? If I go to the technicals, I'm going to show you exactly what it means. And then we're going to see a correction. That goes for Ethereum too. That's not an altcoin, but Ethereum too. I'm looking for a final rally on Ethereum before I see a corrective move. And I know that Bitcoin's been stalling over there at 50 and it's trying to break it. It's gone a couple of times above it, but it's stalling at 50,000 and it's not breaking. But check this out. I'm going to go to the chart right here. If you look at the market cap BTC dominance chart, it's telling you here that we're in a wave 4. I mean, this is incredible the way the markets are setting up right here, giving us a good setup. We're in a wave 4. And I posted this on social media, and I said, hey, look at this. We're in a wave 4 pattern right now. And so when we see the dominance chart head south, that means big opportunity for the altcoins. And so we're being range bound. That's why you haven't seen a lot of the movement on the altcoins yet, because we haven't broken out of this consolidation yet. And as soon as we do, we're looking for a short-term move. This is the 5th wave right here. So when we get down to 43 on the dominance chart, we're then going to see a corrective move back up again, which means that this is the opportunity for the altcoins to make profit when we're heading south. So we're going to see a final. Now, how do I back that up? I back it up based on technical analysis on the altcoins. Now, if I go to a currency that an altcoin that I've actually moved money out of, and I was in Loopring for a while, and Loopring did this for me. Loopring did this over the weekend, in fact, Sunday, and it was actually Cameron, my son Cameron. They called me up. He says, "Dad, did you see what happened to Loopring?" I said, what? And it's like popped up here all the way to 62 right here. We had a nice little strong rally in a few hours, gave us a nice little pop, and guess what? We cashed out. We took out, not all of it, we just took out the profits. We took our profits out here, and we invested in something that didn't move. And guess what didn't move? Go to Polkadot. If you go to Polkadot right here, and I'm going to go ahead and pull it up. Polkadot right here. Polkadot, let's go to the one I like to get. This one's going to be fine, yeah. All right. Oh, sorry, my bad. This is not it.
So as you're pulling that up, what I also like to do with cryptocurrencies, everyone, is pay attention to the teams behind them, who's talking about them, who's involved, and a very skilled, very bright, amazing track record. Maybe one of the greatest track records ever. Investor is actually rumored to be involved in Polkadot. Peter Thiel. So something to pay attention to long term.
Yes. This is actually a long-term hold. Polkadot is for me a long-term hold.
Yep.
And so you want to build up your positions on here. But if you look over here on the chart right here, this is the way the markets have been moving on Polkadot right here. And so we have this final rally. Let me go ahead and pull it down here. So we have this final rally. We're in this third wave right here, and so we're a little range bound, and we're looking for this final rally. So if I get to price gets to about 32, it's not a big bunch, but I put money in here because I want to build up my position on this. When it goes back up to around about 32, I'm probably going to cash out some of the profits and wait for price to move back down further down south and reinvest back into this, because in the long run, I'm expecting Polkadot to actually, in fact, go a lot higher up. But right now, it's opportunity for traders to go ahead and take advantage of that, because when it pulls back, it's going to chase after some deeper correction move, and then it's going to go ahead and take off. And I think the move is going to be back up here to this previous high right here. So we're probably going to see 17 come to play again before price goes back up again. So I think what's a great play on cryptos right now, and I remember what you said last week. Take some short-term opportunities, and that's absolutely what it is. What you got to do with these altcoins is you got to get in. These are live and die pairs, right? It can either do well or it can die out on us. And so we don't want to be 100% committed to those coins. But if we can get in on these coins that are showing opportunity for rally, and trust me, in the short term, technical analysis is working like a charm. You can identify a corrections move. You can identify when the market's going to have a massive U-turn. And when you identify those levels and get in on the dips of those coins, take advantage of the move going up, even if it's not a 10x type opportunity. If you're getting 3 times, 3x or 4x or 5x on a pair, even a 2x is good right now, specifically while we're setting up with a possible deeper corrective move on altcoins. And we're going to see the same thing happen with Ethereum and with Bitcoin. I don't want to be on the wrong side on that.
I agree with you, Gary, and I'm going to give everybody kind of a little bit of a covert potential. And this is kind of weird because, hey, there is no safe haven in cryptocurrencies other than, what Tether, and is Tether really a safe haven long term? Here's a little bit of a safer play that I actually really, really like. I've been kind of beating the drum on this, and I think all the stars are lining up for it. It's a boring one, but there's a lot of reasons. Technically speaking, I like it. Litecoin. So let me explain real fast all the reasons I like it right now. First of all, it is the second longest running cryptocurrency in the entire world, not going anywhere. It has billions, hundreds of billions of dollars worth of miners that need to support its price because they have hundreds of billions of dollars worth of mining equipment trying to support, the network. And I've talked about ad nauseum. I've talked about how Bitcoin's going down to 20,000 eventually, going down to 20, maybe 25. It's going to hit that mining cost, right? Litecoin is there. Mining cost on Litecoin is about $160 to $170 right now, and it's sitting at like 187. So it's really close to the mining cost, which means that the miners are going to support this level. So it's a fairly safe level to start investing in at. And then lastly, so technically I like it. Fundamentally, I like it. It's not going anywhere. Technically based upon the mining costs, so the production costs, I like it a lot. And then to cap it all off, we have a historical valuation. Now, this is a little bit more, it's not subjective, but it's something that's a little bit more fluid. It's not going to be the same forever. So Litecoin historically has a 1.5%, approximately a 1.5% market dominance weighting, which means it typically, whatever the overall cryptocurrency market cap is at, it will typically demand about a 1.5% of that market cap. Now, the argument is yeah, but Dyson, that was back in 2017 and 18 and 19 before the cryptocurrency, before some of these projects like Ethereum or Cardano or these others got big. I would agree with you. So therefore, I don't think that the historical weighting of 1.5% is fair anymore. I do believe that a weighting of 1% is fair, which means if the cryptocurrency market's sitting at a $2.14 trillion market cap, then I believe that Litecoin's market cap should be $21 billion. Well, it's about $12 billion right now. I believe it's half the value, little more than half the value than it should. I think a fair value right now for Litecoin is $300 per coin. and it's 187. I think the best value in the entire cryptocurrency markets right now is Litecoin. And it's also, ironically, one of the safer places to go into right now, too, if we get a little bit of a sell-off, I believe.
I like it.
Yeah. My only thing is, if you look at that, that's a 2 times. That's a 2x position right there that you can make up.
It's not, it's not fireworks for sure. But
no, it's not.
But again, you've gotten jaded. Gary, think about what you just said. It's 100% return. That's not good enough. that's amazing.
Yeah, but you know why I'm saying that? Because that's the market we're dealing with when you talk about cryptos. You see, if cryptos was a 20-30% return type of market, then that would be a fantastic return. But when you're looking at coins that are moving inside the same month, 320%, that could even be a 1-week rally in a coin if you pick it up at the right price. Those are the things that we're dealing with. And so 100%, even though it is a great return in the crypto market based on the risk that it is, and I'm saying based on the risk because coins can go and they can die. But if you get the right coin,
I think Litecoin Litecoin's
no.
I'll lump Litecoin in with an Ethereum and a Bitcoin.
Yeah.
Now, could Litecoin go down to $40? It could, yes, but it's not like Polkadot could be gone someday, right? Loopring could be gone someday. I don't think Litecoin there's going to be a value in it forever, from my standpoint. But you're right. I totally get what you're saying. That wait a minute, we're talking about a double when there are some coins. Heck, I mean, I can look at Stellar right now at 38 cents and say, man, Stellar could be at $1.20 in this next rally. And then, so that could go up 200, 300% at the same time Litecoin goes up 100%. So I get what you're saying.
But there's a strategy behind it. The strategy behind it is that you play all these risk coins, but you always take your profits and you put it into your huddle, into your big portfolio, and that you're buying into Litecoin, Ethereum, Bitcoin. Those are the ones that are going to sustain all of this. It would never die like we have with the altcoin. I'll never say never, but it wouldn't be like an altcoin that could actually live and die in the same month or the same year. But it's like what I really like about this as well, and you spoke about Bitcoin too, right? And Bitcoin, where everyone's like, is it going to break to and go towards 60? Is it going to move towards 60? I want you to go back to the dominance chart right here and take a look over here. If you look at Bitcoin, now if I pop up Bitcoin quickly here, you'll notice that Bitcoin has been struggling here at this level. It's been struggling at this level right here at around about 50, and just above that, we've got a 1.618 extension of this upward swing. This is it right here. So what's going to happen when the market hits this 1.618? When the market hits the 1.618, we're going to now complete what we call our third wave move. And so now we're going to go back to retracement. Now, I know you spoke about 20,000, but based on my analysis right here, Tyson, I can't see Bitcoin going past this. It may test it, but $42,000 is where we're going to bounce again. Now, maybe we get to 20,000, but this is what's going to happen based on technical analysis, right? The market's going to go ahead and bounce off this level right here. But first, we're going to get to 51. When I see 51 coming to play, I'm going to be very skeptical on holding on to this. Because from 51, we're expecting price to move down right here. Now, I'm going to be watching this real carefully, because if the market takes off and we do get to 60, past 51, then this will be the next support level for the market, just like we've seen all the 1.618 extensions become support for the market when it comes back and retraces back. But this is the thing. How do I know how this is going to play out? Because if you go to the dominance chart like I had before, this is what we had right here. Dominance chart. You can see right here that we have a good indication that Bitcoin is going to it's not going to get to the price of 51 yet. But when we see the dominance chart hit this level right here at 43. Then we're going to go into retracement on the dominance chart, which means that Bitcoin's going to rally. When Bitcoin rallies, that's the 50. If we get to 51, and we still haven't reached this level right here, if we still haven't got to this level on the dominance chart, we're probably going to get to 60. But then look at this. Then the market is going to go for a big dip again, and we're going to get to the fifth wave. That's when Bitcoin's going to drop to $42,000. And then at 42,000, we're going to then see a rally, and that's a big rally that's going to take us home. That's what I'm looking for right now. So I'm going to play this card. And the big thing here the most important thing here when you're trading the cryptos is that we have to realize that doesn't matter what chart, doesn't matter what asset you're trading, the market moves in waves. And when it moves in waves, we can determine where the turning points are going to be and act right now. We're in now what we call a fourth wave structure. And a fourth wave structure is a complicated structure. This is where people get a little antsy, they get a little nervous, they get a little concerned. They don't invest as much, they start withdrawing. That's why you see the market moving in ranges. But when we finish this consolidation and it takes off, that's where the money's going to be at. I think it's an exciting time to be in cryptos, currencies, stocks right now. I don't know why no one would be involved in trading any asset form right now because it's really good. I just think cryptos is more money for the buck.
Oh, I still think, I always go back to the whole adage of risk versus reward. I still think that the risk in cryptocurrencies, you fast forward anybody with a 5-year horizon, the risk is $40,000 maybe. Let's say you buy a Bitcoin. Let's say it's 45. It goes to $5,000. Let's say it's $45,000. I think the reward, in 5 years, Bitcoin is realistically 250 to 500,000. So we're talking risk of 45,000, reward of potentially 450,000. So almost a 10-to-1 risk versus reward, just in Bitcoin, not including some of the altcoins that I think could give you a 20-to-1 risk versus reward. So it's hard to find. It's still cryptocurrencies still represent one of the most phenomenal risk versus reward equations out there.
Yeah.
I just want to buy them. I'm just a cheap person. I want to buy them lower. So that's just
Yeah, but too many people are buying things thinking that, even loopring. I was one of those investors a year ago, buying into loopring thinking, oh man, this thing's going to go to the moon. And the only moon that I saw was 100. And then it just turned back and head back down south again. So, you got to be realistic about what the coin can actually do. And that comes back down to trading, right? Be realistic about what our profits can be on a trade. Doesn't mean that you're selling US dollar CAD, but if you keep selling for the rest of the year, you're making money. You have to play the swings. You have to play the market that you trade in. All right, Chris, final words from you, my friend?
Yeah.
Sorry, we got into a crypto chat there.
No, I was interested to go down the rabbit hole. Look, Gary, I think it's amazing that you and Cameron are playing crypto so aggressively. I'm not in. I think we talked about this last week in AAA. I'm not in nearly the same size that I want to be with cryptos. I am, much like Tyson, I want to buy a lot of cryptos, but I want to buy them at really good levels. And I also am willing to wait. I had a great run, protected a ton of profits from 2017 to 2021 highs. I'm really not in a hurry to get back in. I'm going to play with house money. I'm going to get in at levels that I want. So all the stuff you've been talking about with technical levels, that's what I'm doing. I'm looking at technical levels. I'm setting a lot of chart alarms, and I'm going to get in at cryptos or on cryptos at levels I want to get in on. So it's hard for me just to say, I'm not going to go on this Easter egg hunt for altcoins. I'm going to stick to, I'm in 9 coins right now. I think that's a pretty good portfolio. But I mean, it's already I've got decent levels from the 2021 lows, like Bitcoin at 30K. That's where I bought it. Ethereum at, 120? 120 on Ethereum. That's where I bought it. Or no, I'm sorry, 180. Link at $20 or below. That's where I bought it. So, I mean, I waited for good levels. I was hoping to add more to it. So I'm just waiting. I'm going to see maybe the market surprises us and we have more extremes and irrational moves to the upside, and that's fine. If Bitcoin does hit 60K, Tyson, I'm sure you're going to be like, I can't believe it. That's crazy. I'd be protecting profits right now, because that's probably what I'll do. I acknowledge that those highs are kind of ridiculous, and we probably need to come back down and balance and trade those levels, like taking profit at highs and trying to buy back in at better prices. So,
I do think this, though, if we blow off that all-time high, I don't think the move's going to be small. I think if we blow the all-time high, we could see, what is it, 60? I think we could see 150. I mean, I think it could be a multiple move from that level. It's just, so I think that either that high holds or we see double or triple the move from that. We see a humongous rally, and that could cause a kind of a longer-term peak and then fall.
Crazy, man. Well, fingers crossed. How about that?
Yep.
Yeah. Well, that's why you want to protect profits, take profits off, bank profits, but you don't want to go ahead and get yourself out of any position.
That's right. You got to have exposure.
Because when it blows, it's blowing.
Exactly.
Yep. All right, cool. All right, guys. Well, I appreciate you guys being here. I want to go ahead and say thank you to everyone that's joined us today to watch the session. Hopefully, you guys enjoyed everything. I'm sure you did, because we spoke about a lot of great stuff that you can take home with. Once again, if you like the content of the video, smash the like button. That'll really help us get the content out to everyone. Also, subscribe to the channel. We go live every Monday, but also we may be doing some odd sessions from time to time. And if you're not subscribed, you won't know if we go live. So go ahead and subscribe. Make sure you subscribe to the channel. We do appreciate everyone. Thank you, Tyson. Thank you, Chris. Great conversation like always. And we'll see you guys Monday next week. Thank you.